Hey traders, let's have a quick look at CHF Japanese Yen. So CHF Japanese Yen, we have this beautiful impulse to the downside followed by a nice correction of this previous support now turn resistance, and we broke through that area as well on this monthly or last month candle that we can see basically the market has broken. Now the market is basically coming up to retest this area again, and we can expect the market to fall to the downside again. Now, if we take our Fibonacci from the monthly time frame and we have a look at what kind of price or what kind of area the market is trading at, you can basically see that the market has traded on the 32 many times, touched over there and respected very nicely. So what we are looking for on the monthly time frame is we're looking for a push to the downside, this pair. So if I take my Fibonacci from this high of the impulse to the low, because this is what you want to do, is you always want to take your Fibonacci from the high of the impulse, because this is the impulse to the downside, and then this is basically the correction. Okay, so we want to take Fibonacci from the high to the low of this impulse, and we can basically find that the market is now trading below the 50% Fibonacci, or 0.50. Let's have a look on the weekly time frame and see exactly what we're looking at. Now on the weekly time frame, it's very clear that the market is respecting this area, the 0.50. What we have on this area is basically a very strong area of structure in the market, and we can expect the market to basically retest this area and continuation to the downside on the weekly time frame. So on the weekly time frame, this is what we have for this pair. Basically what we're looking for is we're looking for a edge to the downside around 170 pips around this area. And why do I want to push this area? Because what we have is a clear W formation that was formed, okay, and then the W formation took a retest of the neckline of the W formation, and now we have basically an overextended W formation on the weekly time frame. So overextended W formation normally means that the market will need to make a deeper retracement in order for the market to push back up again. Now let's have a quick look at exactly what I mean. Go down to the daily time frame and you can see clearly what kind of price action we're getting on the daily time frame. So the daily time frame is pretty clear that you can see the market made a nice W formation around here. This is the W formation, okay, and then after it retested the neckline of this W formation, so it made a retest of this W formation and the next push to the upside. So the next push to the upside, we can expect the market to reach into the strong area of resistance and then at least push back to previous support. So previous support, what I mean is basically we're looking for the market to push back into this area around here. This will be the area that we'll be looking at, because this is a very strong area of support and a strong area of resistance as well in the market that was respected before. So what we are looking at on this pair is we're looking for a push to the downside to the given target around here. If you have a look on the 4-hour time frame, it's not yet clear that we can sell this pair, but what we need to see is we need to basically see a break of structure. So what I mean by a break of structure is we need to see the market basically break below this point first. Once the market has broken below this point, then we will be looking for an entry on this pair. So we are waiting for a break. Once we have a break of this area, then we are going to look for a retest of that area and then possibly enter the market on the retest to ride this all the way down to the given target. Now it's very clear that the market is not yet bearish, so we need to be careful. We need to wait for a previous break of structure, we need to wait for a strong break of structure, and then we will be able to enter the market with a good risk to reward. Now this is just a short-term target. You guys could take your target from somewhere else, or you can take your stop loss and take profit from somewhere else, from your own strategy. So this is exactly what we are looking for on CHF Japanese Yen from the weekly, or actually from the monthly time frame all the way down to the daily, we are definitely looking for a good push to the downside for this pair, and we can expect this push to happen anytime soon. So I hope you guys keep this pair on your watch list, and make sure that you guys watch this area for a nice break and a retest, and you'll be able to take this trade to the downside with a good risk to reward. Now if this analysis was helpful to you, or if it gave you some sort of educational ideas, please do leave a comment in my comment section below, and don't forget to give me a like, and also follow my TradingView platform. Thank you very much for watching, and hope you guys have a profitable week.